Hello everyone, you're watching TonTrader. Let's break down the biggest events of the week in the world of crypto and finance. This time, key developments came from several different directions. The SEC is preparing a new regulatory framework for digital assets. The situation in the United States is sending mixed signals, and traditional financial companies are increasingly adopting blockchain technology and stablecoins. First, the SEC is preparing a new regulatory framework for digital assets. The SEC has scheduled a meeting to consider the Reg Crypto initiative, a special framework for the offering of certain digital assets. The new rules could adapt U.S. capital market requirements to the specific needs of crypto projects. Why does this matter? Reg Crypto could make it easier to legally issue digital assets and give companies clearer rules for operating in the U.S. market. Second, MoneyGram is expanding its crypto infrastructure on Solana. MoneyGram has expanded its integration with Solana, giving third-party wallets and applications access to its global infrastructure for transactions between digital assets and traditional money. Why does this matter? Solutions like these make digital assets easier to use outside of crypto exchanges and bring them closer to everyday financial operations. Third, Standard Chartered is taking part in the launch of an HKD stablecoin. Anchor Point Financial, a joint venture between Standard Chartered, Animoca Brands, and HKT, has started the first phase of a stablecoin project pegged to the Hong Kong dollar. The project is being developed under Hong Kong's new regulatory framework. Why does this matter? The involvement of a major international bank shows that competition in the stablecoin market is expanding far beyond dollar-based USDT and USDC. Fourth, Riot has signed a multi-billion-dollar AI deal. Bitcoin miner Riot Platforms has entered into a long-term agreement to provide computing infrastructure for Anthropic. The 20-year contract is valued at approximately $9.1 billion and involves 191 megawatts of power capacity. Why does this matter? Mining companies are increasingly using their energy and data center infrastructure for artificial intelligence. This reduces their dependence on revenue directly from Bitcoin mining and is changing the economics of the entire industry. Fifth, U.S. economic data is sending mixed signals to the market. Inflation in the United States continued to slow. CPI fell to 3.4% year over year, while PPI came in below expectations. At the same time, the federal budget deficit rose to approximately $432 billion in July, the highest level since the beginning of 2021. Why does this matter? Lower inflation gives the Federal Reserve more room to ease monetary policy. However, a growing budget deficit could keep interest rates elevated. For the crypto market, the balance between these factors remains one of the key macroeconomic indicators. What should we watch next? Further progress on Reg Crypto and other crypto initiatives in the United States, the development of a regulated stablecoin market in Hong Kong, new deals between crypto miners and AI companies, and which U.S. economic data will have the greatest impact on the market. Weekly conclusion. The crypto market is now closely connected to traditional finance and the global macroeconomy. Regulated stablecoins, blockchain integration into payment systems, and the transition of mining companies into AI show how the infrastructure of the industry itself is changing. Meanwhile, Federal Reserve decisions and the state of the U.S. economy continue to shape conditions across the entire market. If you're interested in crypto, technology, and financial markets, subscribe to TonTrader so you don't miss the biggest developments.